Hey guys, Whitney here with my special guest today. I know you guys are busy filing in the room. Go ahead and take a time and do that. For those of you who are early to the party, welcome. But I also want to make sure that you find your chat box and the Q&A or the Q&A tab because I'm sure you're going to have questions for myself and today's special guest, and I want to make sure that you've located those two buttons. I'll be sure to moderate all the questions for Jim today. But go ahead and find those buttons, because if something pops up for you, I don't want you holding on to it throughout our presentation. Go ahead and drop it in there, and we will do our best to field those questions in line with the presentation. But I'm also going to leave it a few minutes at the end so we can clean anything up. And anyways, all right, so let's go ahead and get started here. So if you guys, again, welcome. My name is Whitney Elkins-Hutten. I'm the Director of Investor Education here at PassiveInvesting.com. And I do this weekly webinar series to help you learn the ins and outs of passive investing so you can go confidently into your first investment or next investment. Anyways, if you want to learn more about what we are doing here at PassiveInvesting.com, also get access to previous videos that I've created, make sure to go over to PassiveInvestingWithWhitney.com and get registered for all those goodies, and as well as future masterclasses. But let's go ahead and kick off today's section. I want to bring on a very special guest, Jim Pfeifer with Left Field Investors. Jim and I have gone back a few months. I've become a member of Left Field Investors, but we also had the pleasure of meeting back in January at a conference. And so, Jim, just go ahead and tell the listeners a little bit about yourself and how you got into real estate.
Well, that's a big question. I got into real estate accidentally. I'm on career number 4. I started with, I was in business and for a reinsurance company for about 11 years. Then I became a high school teacher for 7 years, teaching in the Columbus City schools. I was teaching finance and education, or finance and accounting. And then I was a financial advisor for 7 years. And that's where I really started learning about money. I'd always been a stock market guy. I was a finance major. I thought I knew everything I needed to know about the stock market. And as I was training to become a financial advisor, I was learning more and more about money. At the same time, I became an accidental landlord when we couldn't sell our house in 2008. And so we rented that out. And so it was the confluence of learning about money and being starting to get into real estate that I learned that maybe, I was doing it wrong being in the stock market, or not necessarily wrong, but there were better ways to do things. And so I started buying more real estate and slowly made the transition to the point where I wasn't doing anything myself in paper assets. And so I didn't feel like I could be a financial advisor anymore, because I wanted to advise my clients to do the same things I was doing, but I can't advise them to do real estate because I'm not licensed for that as a financial advisor, and I don't make money if I advise them to do something else. So I went full-time into passive real estate after I had quite a large portfolio of active real estate. And that led to, when I was an active real estate investor, I started up a group because I wanted people to talk to, right? I wanted to share stories with people and learn from people. And so when I stopped being an active investor, I did the same thing. I went and I found some other people who were interested in passive investing. We started a small group of 12. It was going to be like a dinner club, monthly dinner club in Columbus, Ohio. Our first meeting was going to be March 18th, 2020. If that date makes any sense to people here, it's because that's when Ohio shut down for the pandemic. We never met in person. We went online. And that allowed us to get great speakers, like Dan Handford came on to our Zoom call and presented to us. And so we were able to, that's how our group grew. And so now Left Field Investors is basically a community of like-minded people who are interested in learning how to invest in real estate syndications that bring you cash flow. And it's education and networking is what we provide for our community. And there's a lot of stuff on our website. It's completely free. And then there's a membership site as well for people who want to dig a little deeper, I guess.
Awesome. So, the timing couldn't have been either worse or more fortuitous, because it sounds like you were able to grow beyond just like your local group.
Oh yeah. The pandemic obviously has been horrible, but if it wasn't for the pandemic, I really don't think there'd be Left Field Investors. I'd just be one of 12 people sitting in a restaurant somewhere, having a beverage and talking about passive investing. So this is the one good thing that's come out of it for me and for our community, for sure.
Awesome. All right, so let's dive into that because I really wanted to pick apart, the need for community when investing and some of the mentality around whether people actually join a community or not. So, what are some of the biggest reasons that you think a passive investor should seek out like a community of like-minded investors?
Yeah, I think the community is super important in this because think about when I was a stock market investor or mutual funds or any of that, I could turn on the TV and people would be, selling me ideas on where to invest my money, right? I can do an internet search and get a million different people tell me where to put my money into the market. I can walk out my front door and go talk to my neighbor and say, hey, what's a good investment? And everybody wants to talk about that because we've been conditioned, we're advertised to that Wall Street is where you make your money. And so you already have that community. If you're a Wall Street investor, you can go anywhere to learn and educate yourself. But if you walk out your front door and talk to your neighbor and say, hey, I'm investing in a real estate syndication, their eyes will gloss over, or they'll say, real estate, isn't that one of those alternative investments? That's super risky, right? And the word alternative always makes my skin crawl a little bit because it's the place you live, right? It's where you go to work. It's where you store your stuff. All this stuff is real estate, and that's what we're investing in. It's a much, I'm going off on a tangent here, but it's much better than investing in a piece of paper, holding it for a while and hoping that later you can sell it to someone for more, right? That's what Wall Street is. So back to the community, the reason why you need a community is because how else are you going to learn? How are you going to find sponsors? How are you going to learn how to vet deals? Because there's a few good books out there, but how else do you learn without relying on a community? I really think that one key to success as a passive investor is community and becoming a part of a community. It doesn't have to be left field investors. It can be, there's a bunch of different communities out there and a lot of them do different things. And I think the key is to find one that the culture of that community fits your personality. It's also that these are such long-term investments. They're very illiquid. And how do you find a sponsor, right? That's the key question. Every single person who joins our group, how do you find a quality sponsor? Well, I can tell you when I first started out, I would use Google. I'd listen to a podcast and hear a sponsor. And so basically I'd listen to them talk on a podcast for 30 minutes. Then I would call them up and say, hey, I'm interested in investing. And I'd talk to them for 30 minutes. I'd spend a total of an hour and they'd send a deal. And then I have to decide, am I going to invest $50,000 or $100,000 with this person that I've spent an hour with, not even in person, right on the phone? And that's hard. I don't know if this person is a great marketer or a great operator or both. And there's certainly people that fit all those categories. So what a community does, it allows you to vet sponsors more efficiently, because now what I do when I want to find a new sponsor is I talk to my community, and I don't invest in a new syndicator unless they come recommended to me by someone who's already invested in them. And it's somebody that I know, like, and trust. That's my new barometer. And it works, right? It's paid off.
Mm-hmm. Yeah, and the network effect, right? And I followed the same approach years ago when I started getting into passive investing. It was just like I had like my 2 or 3 podcasts that I'd listened to of people that I already knew, liked, and trust, and they would interview other operators, and then it's just like, did that person just get on the podcast? Like,
right.
Or right, like, are they really like legit? So you have to pick up the phone and like, how do you suss this all out in 30 minutes? So it's
right.
amazing.
And it is. And the podcast world, I have a podcast too, and you get some credibility that you may not have earned or you may not deserve by being on a podcast. I mean, people think that because I have a podcast, I know everything there is to know about passive investing. That is not true. But also, as a podcaster, you get guests on and you vet the guests and you make sure. I mean, most people are pretty careful, but it doesn't mean that just because they're on somebody's podcast that they endorse them. I haven't invested with everybody that is on my podcast. I've tried to vet them and make sure that they're legitimate, but there's a lot, it's hard to invest with everybody, right? So even if they're on a podcast and like, and trust the podcast host, that doesn't necessarily mean that that's someone worth investing with. And that's why I think that's where the community really comes in, because you can contact anybody in your community or your network and just say, hey, have you heard of passiveinvesting.com? What do you think of them? And then you get some feedback. Oh, well, they're great. They do this. They always put their K1s are on time. They give me monthly updates. You can find out all that information that otherwise you're just hoping, and hope is not a strategy.
That's on my refrigerator. So I'm very familiar with that quote. So let's talk some tangibles here. Like what results have you actually seen with building this community? How has it actually physically impacted your portfolio?
Well, I think that I'm in with a better group of sponsors than I started out with. So I don't know that I can say, hey, this is the positive that I've gained. I think I have. I can prove the negative that I don't have anymore. I think that's easier because when I first started out, I had a rollover IRA that I rolled into a self-directed IRA. And I went to my first conference and I had this big IRA that was for the future, right? So it was my retirement money. So I felt like I could be more risky with it because I could replace that money if I needed to. So I wasn't as diligent as I should be. And I certainly wasn't as diligent as I am now. But I went to this conference and I just started meeting people and I was just, hey, hi, I'm Jim. Oh, you're a syndicator? Here's 50 grand. Oh, you're a syndicator? Here's 100 grand, right? And I wasn't vetting them. I wasn't even really vetting the deals. And none of those deals have, well, one of them has been really bad, but most of them have been fine or okay, or just not the greatest. But none of those deals I would invest in again with what I know now. So I think in answer to your question, what are the positive results? It's that I'm not in those deals anymore because I don't go to conferences and just start throwing money around, right? I go to conferences, and when I go to conferences, I meet sponsors for sure. But really, I think a great strategy for conferences is to meet other passive investors. Because if you're meeting other passive investors, you're growing your network. And if you're growing your network, now all of the people they've invested with are going to be known to you because you can share that information. And so that's a roundabout way of saying the results that I'm seeing that are positive now are because I'm avoiding some of those mistakes that I've made in the past.
I resonate with that. I mean, I've talked about it on here a couple of times. Like I didn't have a community when I first got into passive investing, and I had one of those like really bad deals.
Yeah.
And I think it's a matter of not if, but when you have a deal that goes a little sideways, hopefully not south, but we talk about it all the time here on the masterclass that the operator is the deal. And so, I think I heard this quote from you. You got to bet on the jockey, not the horse, right? So,
yeah.
It's, how can you get in touch with other people that can help you, shortcut that path of finding the right jockey to bet on? So that leads me to my next question. Why aren't more investors doing this, joining in a community to learn about, to shortcut their path?
It starts with why aren't more people into real estate investing, right? I don't know, probably mostly because they don't know about it. And when they hear about it, they hear it's alternative and scary. So then once people get into this and learn that, okay, it's something legit, I don't know that they know that there's communities to go to. And I don't, I haven't talked to too many sponsors that when I talk to them in my initial call say, hey, are you part of a community? Go check these guys out, right? Which would be helpful to people, I think. But, I think what happens is people get locked into one syndicator. It happened to me when I first started. I found one multifamily syndicator and I heard they were great. And I thought they were great. And so I just went all in and I did my first few investments with them. And then I realized, hey, I need to branch out because I want to diversify. When I diversify by sponsor, by asset class, by market, and sometimes even by type of debt and some other things. But I was all in on one. So I think what happens, and I've noticed a lot of people that join our community, they have multiple investments with one or two syndicators. So I think part of it is they just don't know. And some of these groups, you can go to a group and one will be free. Like Left Field Investors is mostly free. We have a paid part, but mostly free. There's others that are free. There's others that, there's this lengthy application process, right? And I got denied on one of them because I have my own group, right? I think you should belong to multiple communities, but that's just me. Then there's others that say it's a $10,000 or $20,000 fee. And so I wouldn't join one of those groups right away. I might later on once I've figured things out. So I just think that we need to do a better job of communicating in this industry that it's okay to get some help. right? Because if you think about it, when you're in the stock market or what everyone's used to, the conventional investments, you're either a do-it-yourself person, meaning you're doing it all by yourself, and maybe you talk to one friend or one neighbor, or you have a financial advisor and you're just doing whatever the financial advisor says, and you're not really sharing that. So stock investing and all that, that's not really a community event because it's so easy and frictionless. And this is difficult, right? It's, you can do it either the do-it-yourself way with the community, or you can do it kind of where you're in a community that kind of points you in the right direction. There's all different kinds, but I just think that it's because alternative investing has this stigma as alternative. And then, so it's hard for people to find it. And then once they do find it, they maybe they just don't know about the communities. I can't think of a downside of being part of a community, to be honest.
Mhm.
And this is a team sport. Investing in syndications is definitely a team sport. And I don't think you can be very successful if you're on your own.
So let's talk about that. Like, what are some of the challenges that investors, face that when they, are looking to join left field investors, or when they first get in? Like, what are you, you've already alluded to a couple. Maybe they're already like all in with one operator and they haven't diversified, or maybe they're just kind of don't understand that, real estate is, the alternative aspect of it. Maybe isn't as scary. Like, what are some other challenges that investors have?
I think one of the big ones is, if I want to put money into my IRA, I just write a check for $100, $1,000, whatever I want, right? Or if I'm putting money into my 401k, it just comes out of my paycheck. Or if I'm going to, there aren't very many times when you're asked to send someone a wire for $50,000 or $100,000, right? When you're buying a house, maybe, but when you're buying a house, there's the real estate agent to protect you, and you've gone and seen this big house and you've walked through it, so it's real. And with syndications, people don't think of it this way, right? If you're putting $24,000 into your, or $2,000 a month into your 401k, that's $24,000, but it's only $2,000 a month and probably $1,000 a paycheck, right? So it's different than if someone says, "Hey, you want to invest in our deal? Wire me $25,000." It's the same amount of money, but it's a much bigger deal. So I think part of it is that the minimums, and 25 is hard to find now, right? It's 50 or 100 are the minimums. So I think that's a big obstacle. And there's ways around that. I think we've talked before, we use a company called TribeVest, which allows groups to invest together, which effectively reduces minimums. It also increases the number of deals you can get in, so you have more diversification. But I think one challenge is certainly the minimums. And like I said, there's ways to get around that. Another main challenge is just lack of knowledge and confidence, because let's say you found you have a community and somebody who's invested in this sponsor. Okay, well, now the sponsor is going to send you a deal. What do you do next? Is it a good deal? I don't know. I mean, once you vet the sponsors, we talked about, that's the most important part. So once you vet the sponsor, you're pretty sure that the deal they're sending you is probably okay. But how did I analyze the first deals that I got into? They sent them out to me and I sent them a wire. I didn't know what I was doing, right? And I didn't know that there was a way to figure out what I was doing. I just thought, well, I like this guy or gal and I met them and they said this is great, so I did it. But now I have a process, right? I use my community. We came up with some tools, and now when I invest in a new deal, I check it and compare it to other deals that I've invested in. So a lot of it is the education. There's huge barriers here. There's an education barrier. So you're not comfortable. There's a $100,000 wire transfer barrier. How do you get over that? And then the other thing is, these are long-term illiquid deals, right? If you make a mistake and you invest in the stock market in the wrong stock, you can sell it tomorrow. Heck, you can sell it today, right? But if you're in a real estate syndication and you invested in a self-storage deal that's supposed to last 5 years and the market changes, it could go 7 years and there's nothing you can do. So I think the illiquidity is also another challenge, another barrier, but it might help you when a pandemic comes around and the stock market crashes 40% and you panic sell, right? I didn't panic sell any of my real estate. I mean, I might have if I had the opportunity, because I was freaking out when this all started, but I couldn't, right? Too illiquid. So maybe it saved me. I don't know. So I think those are some of the challenges. And that's, again, I hammer this all the time and I'm a broken record. but all of these can be overcome by being part of a community or several communities, because then you can invest with other people, there, lower minimum. Also, if you're investing with a group, you have other people to talk to the deal about, right? Or even if you're not investing in a group, what happens in left field investors when a deal comes out that people are interested in, they post it to the forum and other people talk about it. We post our analyses, our spreadsheets, and everyone, and so even if you're not investing in that deal, you can follow along the conversation and learn something so you're ready for the next one. And so some of these barriers go away just by being part of a community.
Awesome. So we've talked a lot about like who left field investor is for, right? Somebody who's kind of getting in the game, has, knowledge barriers they want to overcome, and not even like, you don't even have to have an obstacle, right? You just want to share resources and be with the like-minded investors. Who is this not for?
Well, it's not for someone who isn't interested in passive investing in real estate syndications, but, I think it's not for, you got to find a community that their culture fits your personality, right? So it's a joke kind of, but there's another 506, the 506 investment group. It's a great group. I'm part of it. It's a lot, right? There's a lot of stuff in there. So it's a little bit too intense for me. And I joke that if we went to their meetup, I'd probably feel like I had to wear a tie and suit, because they're very sophisticated and, they know what they're doing, right? But that community just isn't super comfortable for me. Now, if you come to a left field investors meetup and you wear a collared shirt, you're going to be fancy because we're probably going to be dressed down, so that's just an example of, you got to find the right culture that fits you. And left field investors, we have people that haven't gotten into their first deal yet and are trying to figure it out, and they might be accredited or non-accredited. And we have people who are in 150 deals. And so we have a very broad range, and they're all willing to share. But I don't have a good answer to who it's not for, other than find a community that fits you. And you have to be interested in passive investing in real estate, obviously. And you have to be a little bit of a do-it-yourselfer, I think, if you're going to be part of left field, because there are other groups, and I know you're familiar with them, Whitney, and this is a fine model. I am not knocking it at all. A lot of these are doctor groups, but others are around too, where you join one of these communities and they might be the general partner on some deals, and they might funnel you to 2 or 3 syndicators that they have vetted, and they're the favorites, right? And so when that person who like and trust, and you're part of their community, they send a deal to you, you don't have to vet it. You don't have to analyze it. You can just invest in it because you're trusting the person who sent you the deal, right? That's the person you vetted. And that's for people who maybe don't have the time, maybe don't have the interest in digging in and kind of doing a do-it-yourself way. Where in left field investors, we're never going to recommend an investment for you. We will tell you what we're investing in. We will show you our analysis, and then we will say, you got to make your own decision. Do you have any questions? We'll answer them, but we're not going to say, hey, go invest in this deal, where those other groups will. So that's one kind of person that probably would do better off in a different group. They could come to our group and get information and learn, but their investing is probably going to be elsewhere, I would say.
All right. So I want to shift our focus a little bit, because you are such an amazing passive investor. I know there are many, people listening right now that are just aspiring to kind of replicate the success that you have. So what is your best piece of investing advice?
Well, you're going to community, but I've said that a million times. So I think my best piece of advice would be do something, but do it slowly and thoughtfully, right? Because when I was in the active real estate, that was the main thing. You got to take action. You can't just sit around underwriting stuff all day. You got to go buy a piece of property. And that's true. And I think that's how you have to do it in the active world, because that's not as long-term. If you make a mistake, you can always sell the property and all that. But I think in this world, you have to get off the bench at some time, right? You have to get out there and make an investment. But you don't have to make all the investments right away, right? A lot of people come to left field investors with a pocket full of cash or an IRA full of cash, like I did when I went to that first conference, and they think, oh, great, I have a community. I've learned about a few sponsors. I'm going to invest in this one, right? And I get that, because inflation, we can't have cash. Cash is trash. Get rid of the cash. One of the best pieces of advice I got recently was from one of our members who's really sophisticated investor. He said, you don't need yield with every dollar. It's okay to have some cash sitting there, have a plan for it, have a strategy, but it's okay. Yes, you're going to lose because inflation, right? You're going to lose some buying power, but you don't need to invest every dollar. And so what I would say is come up with a plan. If you have $200,000 burning a hole in your pocket, right? That could be 4 deals, that could be 8 deals. Then just commit to doing that in the next 6 months or 12 months, but don't do it all at once. So I guess my advice would be act, but act slowly, because if you act all at once, you're not going to have any time to correct your mistakes and you're going to make mistakes. So that would be my best piece of advice, I think.
I love it. I love it. And it's one thing that I'm in a women's community of women and female investors. And we just met this morning. And one of the things that I was helping the group kind of work through, we had a couple of people that had the cash burning a hole in their pocket. I'm like, listen, we want to vary our timelines too, right? You don't want to put it all in, betting all on one jockey, like what happens with that particular operator, that particular deal, that particular market, but also like now you've got all this money rolling out in 5 years as opposed to chopping it up a little bit and having, a more diversified strategy. So I love that. I love that piece of advice.
Yeah, absolutely.
So another question for you is like, what do you have a particular resource, channel, or tool that investors can, that you use that, you think would be useful for other passive investors to know about? I know we talked a lot about left field investors, but is there another kind of like tool that you think that you have?
Yeah, I think that, again, I hate going back to it, but the tool is your community and other people. That's number one for me. I don't, there's a few other things like we've done some networking. There's this app called Intros that helps you network one-on-one with other investors. And so it's kind of inside a community. I don't think you could do it without a community, but that's a really cool tool. It just sets you up so you can talk one-on-one with other people who are interested in the same thing you are. But, as far as tools, podcasts, right? I listen to a ton of podcasts and it always gives me great ideas. I don't always now immediately call a sponsor from the podcast. If I find out that I like what they're saying, I'll go to my community and say, anybody ever heard of this person? So that's one of the things that I do, but I don't know if I have a great answer to what tools I use, because we do have investing tools through Left Field Investors. I don't want to make everyone, jump on that, but really everything, Whitney, for me comes back to the community, the network. That's where I get all of my information. And that's where I have all of my investing success.
Awesome. And guys, I want to wrap up a little bit early today because I know we have some we have questions that are coming in that are very specific, and I want to make sure we kind of ask those questions in our after party. But how can listeners get in touch with you, Jim?
You can go to our website, leftfieldinvestors.com, or if you want to, there's a connect button on there. There's a subscribe button on there. There's also a free masterclass that you can watch that is basically takes you from what is a passive investment all the way through to how do you screen sponsors, how do you vet deals, things like that. Or you can send me an email direct, jim@leftfieldinvestors.com. I'm happy to set up a meeting and talk to anybody.
Awesome. If you're joining me live, don't go anywhere. Jim, thank you so much for hanging out with me today. I really want to encourage everybody, find a community, find, those, like Jim said, those like-minded investors that you can bounce ideas off of, shorten your path, to education, becoming educated and comfortable with making that investment. Until next time, guys, we will see you soon.